gives me great pleasure to bring on board Mr. Rajnish Kumar of State Bank of India to talk about not just banks or SBI, but also how life has been for Rajnish Kumar personally as being the chairman of India's biggest bank. What have been his learnings, what his view on the sector is, and how exactly he feels that the Indian banking sector, especially the PSU banking sector, will move and morph in next 4 or 5 years. Mr. Kumar, such a pleasure to have you on ET now. We've always spoken to you as a banker. We've always spoken to you about the State Bank of India specifically. But today I want to start with Rajnish Kumar, who had very humble beginnings when he joined State Bank of India and now is retiring as the chairman of State Bank of India. So when you look back your life in State Bank of India, how would you like to summarize it?
No, very exciting journey. And as you mentioned that the first branch which I joined, it was in the interiors. And throughout my career, it has been such a variety of experience, both in terms of various places I have worked, as well as the variety of assignment. And I don't think any bank other than State Bank of India can give this kind of exposure. It is very rare that I have traveled across the country and I have traveled across the world. And in the bank also, various assignments in HR, in large credit, small credit, mid-size credit, overseas locations, heading UK operations, had a circle in Northeast. So a wonderful journey throughout.
When you took over as the chairman of State Bank of India, that time we were recovering from the demonetization shocker. GST had just been rolled out, and as you retire now, we are struggling with COVID crisis. So I guess in your tenure, we've seen three extraordinary circumstances which rarely come together.
No more than three. So you mentioned demonetization, and I was managing director at that time. Then GST, yes, but not much to do directly with the State Bank of India, but merger of 6 banks. So partly as managing director of the retail bank, and then later on as chairman. Then of course IBC, that was another big event. And of course, this COVID-19, totally unexpected. And I would say that haven't seen anything like COVID-19 ever before. So this is a once in a century event. And it was also to happen during my tenure, but can't help it. And yes, there have been many challenges, but at the same time, I'm happy to say that State Bank of India, we have been able to manage all these challenges and have not shied away from the responsibility which is cast on State Bank of India. And I've forgotten to mention about Yes Bank and Jet Airways. So there have been, it has been a very eventful period in that sense, and very challenging, very exciting.
You led this entire process of taking a lot of SBI subsidiaries public, and the recent one is SBI cards. Whereas you've given what markets wanted, which is that you managed to unlock the real value of SBI subsidiaries. But somewhere do you think markets, you've not been able to convince a market purely looking at the stock price of SBI, the inherent strength what SBI currently enjoys? I mean, the stock price is refusing to go higher despite a good book and valuations which has come out because of unlocking of subsidiaries?
Yeah, that is very true. And I can say that is the only regret I have, that the market capitalization of the bank today, it does not reflect its true inherent value. But over a period of time, I'm still hopeful that market participant would realize ultimately that what is the strength of State Bank of India and give it a fair value.
What is your understanding on the way things now are likely to progress on the moratorium front? You've been vocal about the numbers, but when we spoke about the numbers, a little bit of time lapse has happened after that. Are you still confident that we are not in for any shocker now that things will start normalizing?
Doesn't seem to be so, and this I am saying purely on the basis of the loan book of State Bank of India, and it doesn't seem to be as bad. I'm not saying that it cannot turn out to be bad, but it's not a 1 quarter or 2 quarter thing. So depending upon how the economy performs going hereafter, that would be very crucial. But whatever has happened, if I look at its impact, and if we are talking about, say, FY21, then in terms of the impact on the overall non-performing loans of the bank or the requirement for provisions is going to be it's going to be perfectly in line with what bank has estimated and is readied itself. And 22 would be very, very crucial, FY22, because if there is a prolonged recession or there is a prolonged problem with the economy, then its impact on the financial system and the banking system will become inevitable.
Now, the which will just come up as we speak, which is that you mentioned Jet Airways and Yes Bank. 3 years out, what would be the importance of Yes Bank for State Bank of India? I mean, will it be treated as an investment which 3 to 5 years from now, you think SBI will be able to cash out of?
Yes, we are very confident, and the way the Yes Bank has started rebuilding its franchise, in 3 to 5 years' time, State Bank of India would like to, would like to exit, because our commitment is 3 years, 26%. And after that, bank would be free to divest. And within this period, 3 to 5 years, I am very, very confident that Yes Bank will emerge as a very strong bank.
The general view, Mr. Kumar, in the market is that banks have become very, very risk averse. Loans which they were approving of earlier largely because of caution, and given that last 8-10 years have been tough for the NPA cycle, banks, both private banks and public banks, they become extremely risk averse. Is that a feeling which is there now with bankers, that they want to be extremely risk averse, if I may say that in Hindi, that दूध का जला छाछ फूक फूक करके पीता है?
वो तो थोड़ा, if I can answer in Hindi, तो वो एक natural process है, and nobody wants that the learnings from the past, and if we don't learn from the past, and if it is business as usual what it was in the time of excess liquidity, then what have we learned? So one is that based on the learnings, most of the banks, I presume, that they have done some tightening around their underwriting practices and model. And if we want to be that it should be the same as it was when there was excess liquidity in the system, banks were growing at 25%. The State Bank also had a growth at one point of time at 25%. And do we want to be in the to be lending in the same manner? But at the same time, we would be more than willing to share our sanction analysis report. We do a sanction analysis report every month, that how much work we are doing in terms of sanctions and disbursement. So I have no issue with that. We are sanctioning loans, we are growing our book, and our earnings from the loan processing is higher than the previous year. Definitely there has been a shift in the business mix of the banks, and it is more of retail now than the corporate. But In underwriting, we are definitely more prudent. There is no doubt about it. And if that is equated with risk aversion, then so be it. But there is a growth in the business. As we speak, YOY, we have grown by 1,40,000 crore. And that is about 7% plus. And this growth is after whatever repayments come. Bank's balance sheet is so big. So for a growth of 1,50,000 crore, you would have sanctioned and disbursed at least 3.5 lakh crore. So it's not that work is not happening, work is happening. And now still if people feel that without a PPA, without a coal linkage, you give a loan to a power IPP. So we will not do it again. And if you call it a risk aversion, then call it a risk aversion.
Given, Mr. Kumar, that there is definitely a unemployment uptick, there are job losses, uh, should one worry about retail delinquencies? I mean, not for SBI, but in general, because look, there is an issue with salaried class now.
So definitely, to the extent it is salaried class, and if there's a job loss, there will be some impact. But what we have also to understand and realize that job losses are more in the informal sector. And the people who have just lost jobs, they are not in typical sense the borrowers. And that's why there will be a percentage of people who are salaried class and who have taken, say, loans against salary or a housing loan or a car loan, there will be some delinquencies. But largely the job loss which has happened is more in the informal sector and at the lower end of the salary structure, and that class is not a they don't have too much borrowing or personal borrowing. So that's why I believe that in terms of percentage, the impact on the retail will not be as high. And again, of course, for SBI, as you have said, the position is slightly different in the sense that we have more of government sector loans, and there the job loss is not there. Private sector, some of the sectors like aviation or hotel or tourism, and to that extent there will be impact.
Uh, During your tenure, SBI also gave birth to a digital platform, something which has become very large. It's number 4, number 5 platform now. Nobody talks about it, but you've been, I don't want to misquote you, but our understanding is that your view is that the next subsidiary which SBI wants to unlock is, is my sense right?
Okay, as I said that these are all the possibilities which are being explored, and first is its technical feasibility. So technically it is feasible. Second is first SBI customers and then customers of other banks. But as a platform, it has taken shape, and that is what the future path for would be. That it becomes a subsidiary and it becomes what you call a model where it becomes a service provider to many other banks who can't and don't have the capability to invest on the scale at which State Bank has invested in this platform. So that is very much possible, very feasible. As far as the valuation number is concerned, that was a sort of a part of a discussion or the conversation. And it came up that how the startups get valued. And the context in which I made that remark was that if I look at the startup valuations, then would be the largest startup from a legacy bank. And going by the methodology for startup valuation, then I believe that it should be valued at $40 billion. So we have to understand the context correctly.
I just wanted to get this one right. So, what would be your handover to your successor? I mean, SBI is a legacy, and being an SBI chairman is a matter of pride. But what would be your handover to your successor?
Handover means like for most of the state bank chairman, the maximum or the longest tenure they have is uh, one chairman at 5 years and one chairman at 8 years. And other than that, mostly it is 2.5 years, 3 years, 3.5 years. So it is a continuum. That is what I always say. That uh, you do certain things which are left unfinished by your predecessors. You do certain things for your successor to finish. And that is how this story continues. But what should not change and remain unchanged is what is the value system which drives the bank. And in State Bank of India, we are proud of our value system, and the the successor also is part of the team which has been working so assiduously for the growth of the bank, for its welfare, for strengthening it. So it is just a continuation of the work, but individuals' decision making, his style of functioning, they differ, and to that extent, the difference becomes always visible. But till such time there is adherence to the core value system of the bank, I don't foresee any problem. And as I have done, and again I am repeating, carried forward many fun unfinished items. And there are many things which I have initiated which are difficult to complete in a 3 year tenure. So I am expecting that my successor will finish that and state something new which his successor in turn can carry forward.
Is that been the biggest challenge, Mr. Kumar? I'm not drawing you to political waters, but the fact that, like you yourself mentioned, that it's only only two chairmen who've got extent tenures of more than 5 years, and only one who's got 8 years. I mean, being the chairman of a big bank, 3 years, 3.5 years is too small for somebody to change things around. I mean, because of the size and the reach of SBI.
No, it's not that. Even like I'm not boasting anything about myself, but I said 3 years ago that whatever I want to do, I will try to do within 3 years. And that is what you can do a lot. Now, whether the tenure should be too long or is it too short, but when we are appointed, we know that it's going to be something around this. And as I said, that starting from earlier, prior to 2000, we had situations where chairmen were even for less than 1 year. So that was a very bad situation. 2000 onwards, at least minimum 2 years was ensured, and now it is minimum 3 years. So it is better than 6 months, 9 months, or 1 year as chairman. And you can do a lot within 3 years. It's not that you can't do. But as I said, that one advantage in a state bank is because the people are coming from the same organization, and they are part of the board and part of the policy making, part of the execution team. So the short tenure is made up, and that's why the succession is very quick, and anyone who comes, they are able to settle in very quickly. But if a person was to come from outside, then at least half of his stay would go in understanding the organization. And State Bank of India is a huge organization, very complex organization with multiple businesses. We have finger in every pie. So for an organization like this, if somebody coming from inside, they settle very quickly, and this you would have seen in the past also. And but the stay definitely 3 years would be very very short if somebody from outside was to leave. And I think that is the problem with the public sector banks, but not with the State Bank of India, because of the insider taking over the mentor.
Mr. Kumar, I just want to go back to that whole point on SBI valuations once again. Right now, SBI does not need capital. You've been very vocal about it. A lot of banks have raised capital. You've not raised capital. You will have to raise capital. Maybe not right now, maybe after some time. But at this level, would SBI be comfortable in raising capital, because your stock is trading not even at 1.5 times book? I'm talking the pure banking business. So if you have to raise capital, will the bank be reluctant on raising capital at these valuations?
Definitely, it's not only about valuation, it is only about the need also, and the way our RWA are growing. The analysis and the capital plan very clearly, we are very clear that internal accruals are mostly sufficient to fund the RWA, and that's why we never felt the need for raising any additional capital. For risk management or the risk capital, we don't need, but even for growth, we may not need any. But all the enabling resolutions are in place. And if we have to go to the market, we can very quickly go to the market. Thank you very much, Nikunj.
All right, sir. Thank you very much. All the best.